Hey everybody, welcome back. No fancy intro tonight. We're going to get right to it. We have Oracle's earnings. We have a lot of breakouts and a lot of breakdowns, a lot of reversals. So we're just going to jump right into it for time's sake. If we look at our key levels on the ES, we really have not moved. The one thing we did do, which is good, is we have a 3-bar pattern right here. 1, 2, 3 down. You get a little reversal bar, a doji, and then we held. Now, this is nice. It didn't have to go this way. This had to make a decision. It made one, and we reversed. If we overlay the simplest of averages, you can see that the 22 is right here, the 12, and here's the 55. So we're pretty wedged in here. Now, flip back, drop an hourly, and if we take a look at the hourly, well, we can see the obvious, which you can see your left shoulder, your head, and your right shoulder. And I'll just point it out. There's your left shoulder, head, and right shoulder. Now, we take this and just draw it up here and look at our neckline. We can see the trying to break through the neckline, unable, the break of the neckline, the retest, and hold. So why is that important? It's important for tomorrow because you're going to want to watch 45.22. Let's call it 45.20 and that area. You can see where we are this evening. And we're down a little bit. We're going to talk about Oracle and what happened. There's your control bar right here. So this does not get much easier for us to draw levels, to take a look at the world and see what's going on. And we can see this rejection. Now these rejection and these necklines, whether they're inverse head and shoulders or head and shoulder neckline reversals, let me just drop this one down. When we were talking about this head and shoulders a long time ago, I don't really care how you refer to them. There's the pattern and you can see it, whether you just call it the rounding pattern or however you want to refer to it. I mean, you can see how it starts to shape up right there. So it's definitely something that we want to watch. And now we're kind of watching the inverse of that. One of the things that I do use when we do the pre-market live, the public one in the morning, is I'll use these private clouds just to show everybody what I'm looking at and how the world's going. And we did start turning green here. This is good, and we are seeing a rounding. Now, my concern is Oracle and what kind of effect that's going to have on the market tomorrow. And I'm not really sure how much of an effect it's going to have. So we had some pretty decent news tonight with Japan, and that really affected the market, especially affected the dollar. You had Europe's CPI coming in a little weaker than expected, which was great. So we had some data that came in that was lower, and that's why the dollar imploded. Now, you broke out. Higher high, get almost a perfect dragonfly up here, which is great to see. And yeah, that's a reversal. Now, that's one day. One day does not make a pattern, but that's pretty substantial place to reject. Like that is not where you would want to reject. Now, if we look at this on a weekly, look at the dollar, it's really nothing yet. You basically have an inside week. So it's not the end of the world. Let's not get all giddy. We obviously want the dollar to drop because, as you know, as the dollar rallies, equities do what? Dollar rallies, equities go lower. And we can see that very clearly over something as simplistic as just dropping in a 200-day moving average. And you can see when we broke above and started rocking and rolling right in here on the dollar, and that was pretty much the peak of the market. You can see here how the equity started turning when the dollar started to get weaker. So there's a very strong correlation. I don't like that we came over the 200, bounced off of it, held, and now we have this. Now, it doesn't mean that we're going to fall apart, and it doesn't mean that we're going to rally. There is another option where you just go sideways, and that's something that we should talk about for a moment. You can just go sideways. That would not be crazy. If you don't want a golden cross here, which I do look at these, whether people believe in them or not, it's fine with me. Gravity doesn't care if you believe in it either. But if you have this right here, and you cross here, the only way you're not getting a golden cross on the dollar is if you look right here and you're like 103 to 102.33, and then we slide it over. Just remember the numbers here as I come over. And you can start seeing they're getting closer and closer together. And now we're at a point where we're about 10 cents away. We're 4 days away from a golden cross. The only way that you're not getting one of those, and I know I'm going linear and know that they move more than linear. The only way I'm not getting a golden cross on the dollar is if something major happens and it gets under 103. I don't know how that's going to happen. The only thing that I could say to you is maybe we come down and we go sideways, and maybe the moving averages, which are starting to go sideways. See, moving averages don't count for as much if they start to get trendless. If we're trendless, moving averages are a waste of time, pretty much. And I'll give you an example. If we look at moving averages right now on IWM, you're going to go batty. You would go absolutely batty if you've been looking at these since about 22. Well, let's go back for a year. If you've been looking at this and going, well, this is, oh, well, we're above, we're below, we're above. I mean, you're going to go nuts. So when you're trendless, moving averages are not that great. So the question is this signifying, let's call it what it is. You're going to get this golden cross. So at best, the dollar is not going to implode. Let's just deal with that. At best, the dollar is going to churn in this range, right? And again, remember what we said. We assign probabilities to outcomes. We don't state what's going to happen. Let everybody else look at the crystal ball, right? As that Ray Dalio quote I posted in the YouTube room today, and I posted on Twitter as well. Same thing. You don't want to be guessing, and you don't want to be pontificating, looking at your crystal ball as to what's going to happen. What you want to do is analyze and assign probabilities. This is going to happen. The only way it does it is if the dollar has one of the single greatest drops in history that it's had in the past 40 or 50 years. So that's where assign a probability to that. So this happens, and what does that mean? It means we go sideways. All right, best case, we go sideways on the dollar. The bond market starts to stabilize. Equities start to outperform. Where does that lead us? Well, that leads us into specific names. So then we're going to start drilling into small caps, Nasdaq, those kinds of names. And we had some movers today, guys, and we've had some movers in the names we've been going through in these videos for sure. And you should recognize some of these when we go through them. But look at the Nasdaq. Well, what are we above? Well, we're back above the 55. What do we have here? We have a golden cross. So we can say anything we want about these. As I said, I look at them. You don't have to look at them, but you can see where they're at, and you can see the movement on how the market moved from whence you had them. So it's really that simple to me. Now, let's drill into the weekly, and let's look at the obvious again. Did anything great really happen here? No, you have an inside week so far. I mean, I get it. It's day one. We have CPI coming out. We have PPI coming out. But Japan's news is good because it means it's not going to put pressure on the dollar, which then in turn is not going to put pressure on the bond market. And the bond market, you see the 10-year hardly moved here today. So that's all great. And the auctions today went very well. And if you look at the auctions today on the bond market, let's just drop this in so we can look at it this way. And you take a look at 11:30, 11 o'clock. Well, that was really the low of the SPY. And I'm just using the SPY because it's going to be easier for the next part of what I really want to show here. And let's clean this up for a moment, and then let's drop this back to a 15. So this is when the bond auction was today. And what happened right around when that bond auction? Well, you put the bottom in the equity markets. So in other words, people were able to get off their hedges the way that they were in the bond auction, the treasury auction, and then what did they do? Well, they came out and they started buying equities. And that's not, again, it's not rocket science. Who buys at the end of the day? We've gone over this at nauseum. Institutions buy at the end of the day. Who bought? Who moves in the beginning of the day? I mean, it's like Groundhog Day, if anyone's ever seen that movie. Hopefully you have. It's a classic. But you can see this right here. Okay, who sells in the morning? Retail. Who buys in the afternoon? I mean, from 2 o'clock on, who are your buyers? Your net buyers are institutions. What did they do? What did we do? So when you start looking at this and breaking it down, it's very clear what we're seeing. And it's not always that clear. But let's talk about the SPY for a minute, and let's just look at what do we see here. You can see how discom we are, but there's a gap right here, guys, and you got to that gap and you could not get into there. So that's definitely something that's on our radar and something that we definitely want to watch and see how we act on. That 449.28, I'd like to fill the gap. I'm not sure that's going to happen going into CPI. CPI is at 8:30 on Wednesday. With what we saw out of Europe and what we see going on, I do think that we can see some alleviation of pressure if that CPI is decent. I'm not sure how it's going to come in. If I was a betting person, based upon the way oil is trading, and we all look at this ROBO gasoline futures. I don't know if you guys remember this or not, how I look at the world, but what I tend to do, and I find this a very easy way to do it, is I will look at where we were. For example, like here we are in July, and then I'll mark it off, and then I'll go and take a look at August. It's just really a back envelope way to look at the world and see where we're at. And what I'm doing is just looking at gasoline prices for that period of time. So I'll come here and just mark straight across. Here's where we were, and then here's where we closed. Well, that's not really the end of the world, guys, versus what we just dealt with a month ago when you look at where gasoline prices are. Remember, even if you're saying core, which excludes food and energy, your goods still have to get there. So no matter how you want to cut out core, even if you rent an apartment, you're still driving to the apartment. So no matter how you look at your cost of goods and services, oil and energy and gases and everything. So if we look at Gas, well, that's not really going to hurt us that much for CPI. And I'm trying to get ahead of this for everybody for Wednesday. And if you like this back of envelope or you don't believe in it, just comment below. I'm kind of curious if you don't. But I always found it extremely helpful to just kind of mark where I am the previous month and just kind of look and say, okay, well, and I know it's not exact. I got it. You don't know what they're going to pay at the pump. I get it. But when you start looking at that and going, well, you're really only 75 basis points here and you were flat on gas, and this is what they're paying because it's the futures market to some extent. Sure, they're hedging and all that, and you can comment on that below as well if you want. But that's very different than what we just went through, isn't it? So are we going to have a big surprise because of this, because they're way off? I don't know. I can't be the only one that does this. But if you start looking at, it's not my idea that I came up with one day, but you start looking at where you were in crude oil last month, you were up 17%. Are they saying that these costs are rolling over into this month? I don't know. I'm really trying to wrap my head around, the argument on how we're getting higher here, but if you start coming into these numbers, you're really right around flat to up 15 basis points. So I don't see this huge number coming out of CPI, but don't take my word for it because we never know how these numbers come out. I'm just suggesting that maybe they're a little inflated, and I'm trying to get ahead of that. We'll dig into it a little bit tomorrow in the pre-market as well. But if we take a look at that market, you can't knock the day. I mean, you can't look at that and say we had a bad day. Now, if you drill into it through the Qs, that's not a bad looking day. Here's what bothered me about today. Here's the SOXX. Why can't I get over 500? I have no leadership in the SOXX whatsoever. You're seeing NVDA come down, and we're not breaking the 55. I tried a couple times to catch the falling knife. Did not really work at all, candidly. And this led to just frustration. But if we're going to hold, we're going to hold in here. If we're not going to hold, I mean, this sounds prophetic, right? But if we're not going to hold, we're not going to hold in here. The fact that you're starting to close down this much, it's not great. And Oracle didn't do us any favors whatsoever. So they're not talking about things booming, just so we're clear. And we'll show you how that's performing in a moment here. But I really want to hammer home on what I see happening. I see the story stocks again, guys. I see the story stocks coming out. I see the small caps getting their act together. And we talked about this, that we're starting to see those kinds of story names start to play out. For example, I've been talking about this stock since about $16. And I was fascinated that Goldman actually came out and raised their target and objective on the company back here on earnings. They have no reason to do that. They're not really interested in let's do M&A activity for a firm. And we all know how the game's played, right? They all want to get the good rating so that they get the bond deal, the convert, they get to do the commercial paper for them. I mean, we all know that game. So we always take it with a grain of salt. So when they come out and be like, oh, you have to look at a firm, well, you got to be like, really? You have to kind of take a step back. So I did, looked at it, and I listened to the conference call. I was very comfortable with the idea. We're in it. We have a swing in it now, and I like the way it's acting. I would not rule this out, guys. I would not get this off your radar just because we're already in it. Maybe you look for the pullback, maybe you don't. It's too high. I mean, but if you see how this is playing out right here, what are you going to do there? You're going to sell that because the RSI is too high? No. You start drilling into this a little bit more, and you start looking at the volume. I mean, you don't have any red in here. You have one red day. All you have is massive accumulation over and over again. You're going to fight that? Look at, right? I mean, I don't know how long you've been following, but I was calling this a zero back here, and I did exceptionally well with this short. Well, since they sold those bonds to Apollo and it got absolutely decimated, they really started turning it around. Now, you can say anything you want about this company. You see that line right there? See how it held? So you can say anything you want about me, but I can draw a line. So what I would say is this. I would say that when you start seeing companies like Carvana, and they start coming out and they are able to change the way that their bonds are looked at to where their bonds are getting upgraded, you haven't seen anything yet. That only goes one direction. That's like turning a ship. In other words, when your bonds are being downgraded, your bonds don't go, we're going to be downgraded, and then remotely just the next day we're going to go like this and figure it out. No. When your bonds are downgraded, it goes like that, sideways, then down again, then sideways, then down again. And once you break junk, you're called the falling angel kind of ways they look at it, right? When you start coming out of junk, which 78 to 80% of the names never come out of junk. There's actually a term for them where they're called rising stars. It's 20% because what happens to equity prices when this happens, I could do a whole video on this, but I'll just give you the quick version. When you start moving your debt ratings, and let's say your debt rating's here, and then you start going sideways because your margins get better, and then they start increasing your debt ratings. Well, you were borrowing money on your commercial paper at 7%. Well, now you're borrowing money at 6% because of your debt rating. And then what happens? All of a sudden, your earnings get better. And why do your earnings get better? Your earnings get better because the amount of money that has to go to pay debt interest is less. Well, what does that do? Well, that makes your earnings better. The better your earnings are, the lower your debt payments. And so it just becomes a self-fulfilling prophecy where you just watch the ratings go up. So when you see a turn, this is the very first thing that, just remember this. When you see a turn in rating, in bond rating, okay, that's the first one. They don't raise it once and then, oh, we made a mistake and then lower it. It takes a lot to do that. I would not rule out this trade, especially the way you hung in here and you're holding that line. I would keep that on my radar. Now, I do want to talk about some of these names that are big and what are the sectors that are moving. You know, it's all XLC. It's all these big balance sheet companies that we're seeing. This is something that we bought previously in the room. And frankly, we got stopped out of half and lost money. And we're in the other half. If you're struggling, I would strongly suggest you look at staggered stops. It will save you, especially in environments like this when you're going sideways. That's exactly when you start using them. I start utilizing them more in the room when we hit these kinds of environments, and something that you should consider as well. So we're seeing the Metas of the world move. We're seeing the NVIDIAs of the world kind of roll over. Semis are not holding. So maybe what we're going to start seeing is leadership out of XLC. Maybe XLC is going to be the leader. I don't know how long and how sustainable that is, but that is your Google, that is your Meta, and we're seeing these names do exceptionally well. They're not running through the wall, but they're doing exceptionally well. Netflix, you're hanging in there. You are seeing money accumulate into these. Now, this report on Tesla, I tried to short this candidly twice today, did not work. I did not do the long because I was worried about Oracle's earnings, candidly, and I didn't really want to do another day trade into the close. But my issue with this is that everything else fell apart except Tesla today. Everything sold off except Tesla. Here's what you have to know about this, and it's just not my kind of trade to chase. Everybody's different, but that volume's substantial. That is substantial volume. The RSI hit 50. It's curling up. You're probably going to have another day of this. It is very clear to me by the way that this was trading today that you just had institutions that were just getting absolutely clobbered on the short side with this name. They didn't expect it. That is not a small upgrade. He wrote a 66-page report on the name. It's 66 pages. It's not a small thing that he did. So keep that in mind. This could have legs again tomorrow. You could get up here. You could gap fill. Now, what's really fascinating about this is this going to be the thing that gets it out. And if we start seeing the NVIDIAs and the semis roll, I mean, are we going to break the DTL? We haven't broken this DTL since back here. Is this going to be the leader, this XLC? And then some of these small cap names I just went through like AFRM, is that what leads us? The story stocks? That's the beginning of a cycle. A lot of people think we're in the end of one. So I don't know. I don't know. It's very difficult because you have a lot of moving parts. And as I say, we have that stool. And right now, we're leaning on that macro leg, especially going into Wednesday. So I would just keep my head on the swivel. Amazon's one. We're in on the room. We're doing very nicely with that one. Never really got stopped out of any of that portion-wise whatsoever. It's just a beautiful setup right at the lower end of the channel right here. And then it just held. And we did this off of the hourly, and then the reversal, just the follow through. So very little for us to do there. I think we're up like $6-7 already, and just leave it alone. There's very little to do there. Again, I want to talk about Tesla. I do not have any long position there. There are people that are long in the room, and they did exceptionally well with it today. It's very hard to not like that trade, and I do think that you can get up to this area. I would say this, 289 is going to be like a brick. And you're going to want to watch that. For tomorrow, the one thing that you really need to take account of is this. There's two things that you must take account of that are becoming extremely clear to me. This Oracle, this was not good. You had 3 upgrades ahead of this. It was not good, and then it was one of those conferences where you were like, oh God, please stop speaking. because he just made it worse and worse and worse the more that he said. And you can actually see it in the chart. And we've all had those talks where you're long a stock or you're short a stock, or you're long a stock and you're just like, please just stop talking. And that's when he really kicked it in the high gear there about how, things were kind of slowing down a little bit than anticipated. And, now we're down $10. You have a lot of people trapped in this, guys. I'm just going to tell you that. This is why one of my rules is I must be up at least 10% in a name if I'm going to hold it into earnings, because you can get flim-flammed. Now, what happens tomorrow? I don't know. Do they sell it down, flush, and then rally? This stock's been known to do that. If you take a look here, you'll see times like that where they flush for a couple days, you flush for a couple days, and then that's the bottom. Is that possible? It is, but you have to assume that you're going to see pressure in all these names now across the board, right? Going into tomorrow. I mean, they're only down like $1. Some are down actually less. But I think you're going to see pressure in these names tomorrow, and CRM, PAN. So I would watch that. I'd watch that exceptionally close. It would be something I'd pay attention to, because if software starts coming in like Microsoft, well, that's what was leading. And then that takes us into Apple. And Apple's big event, and all Apple's been doing is just tripping stops, flushing people out, and then running back up. I mean, it's been constant as we go into that event. So you have a lot going on this week. You have literally a tremendous amount going on this week. So you're going to want to pay attention to this. On the long-term side, if you're not looking at your REITs here, I think you're doing yourself a disservice. You start looking at these names. Okay, so they reversed today a little bit. That's fine. If the dollar drops or goes sideways, okay, you're going to have international money that's going to come over here. If our rates drop, they're going to benefit. I don't see an environment where companies that own office space in the right locations, please listen to that last part, don't benefit from what's happening right now. I just don't see how that's going to transpire. This IIPR, we're at 52-week highs now. And this just looks like an absolute monster. And I do want to point this out. This MSOS, these names, you're seeing a lot of people, they have to file, congressmen have to file, and you're seeing a lot of these people that are in the know coming out and buying these names. It's highly speculative, and by the time they sell, we never know. But I think it's worth paying attention to. That's it.